Now, business news: and US share prices plunged after inflation rose by more than expected in August. Consumer prices rose by an annual rate of 8.3%. That's a bit lower than in August, but much higher than analysts' forecasts. The increase comes even as motor fuel costs declined by more than 10%, with inflation beginning to spread through the wider economy, particularly in costs for food and shelter. And in the UK, unemployment fell to 3.6% in the 3 months to July, the lowest rate since 1974. But the decline in joblessness comes as droves of staff left the workforce entirely, largely due to long-term sickness. The shortage of workers has driven up wages, but the growth in salary is still failing to keep up with the cost of living, leaving workers suffering a pay cut in inflation-adjusted terms. Well, here to discuss those stories and the other business news of the day is Arise business correspondent Laurie Laird, who joins me from London. Good to see you, Laurie. Now, US inflation rising in annual terms between July and August. Investors, though, still spooked by the latest data. What's going on?
Absolutely. We had a rise in inflation on a month-to-month basis, but we actually had a retreat on an annual basis from July. Nonetheless, investors are absolutely running scared simply because they expected much more of an easing of price pressures in August. All of the main share benchmarks are down. S&P 500 down more than 2%. Same with the Dow Jones. NASDAQ down almost 3.7%, which is a pretty hefty move. We also saw big falls in European markets. Most of those falls coming after this data were announced toward the end of the European trading day, but most of the European benchmarks down by more than 1%. And the reason that people are so spooked about this is they're concerned that interest rates are going to go higher.
I don't know if you already talked about this because I lost you for a brief moment there, but that's clearly spooked the markets. What are you expecting out of the central bank?
Well, the central bank, the Federal Reserve, is meeting to discuss interest rates next week, and they will be extremely concerned, Charles, about the pervasiveness of inflation. When this inflation scare first started, it was really concentrated in energy prices. Now we're seeing these inflationary forces spread throughout the economy. Food prices up by more than 11% in year on year in the month of August. That's the biggest rise we've seen since 1979. I mean, cast your mind back to what was going on in the worldwide economy back in the late 1970s. Shelter prices, which is rents, and also a rating on what it would cost for owners to rent out their house, up more than 6%. That's the highest since the late 1990s. And shelter costs really, really scare the Fed because that is where people spend about a third of their income. So that kind of the spreading out of inflation to all parts of the economy are really going to spook the Fed. People had already thought the Fed was going to raise rates by another 0.75 of a percentage point next week. But there's talk today, Charles, that people are thinking maybe they'll raise it a full percentage point, which would be an incredibly aggressive move from the Fed.
Well, absolutely. Let's turn to the UK, Laurie. A very mixed employment report.
When would you think, Charles, that you'd have unemployment falling to the lowest level since 1974, and people are thinking, this isn't a particularly good report? Absolutely remarkable. The reason that the unemployment rate fell so far is because so many people have left the workforce. And those people who have left the workforce are mostly concentrated in the 50 to 64 age group. And a lot of those people are saying that they are long-term sick. They cannot return to jobs. We don't have enough information to know if this is related to COVID or not. Oddly, we're seeing a return to the workforce of people in the over 65 age group, but not in great enough numbers to make up for those people leaving the workforce in the 50 to 64 age group. So that's why the unemployment rate came down, because so many people left the workforce altogether.
And the central bank there will be pronouncing on interest rates next week. What are you expecting?
Well, they were meant to meet on Thursday, Charles, this Thursday, but they postponed that meeting out of respect for the Queen. This particular data set will spook. We talked about the Fed, the U.S. central bank being spooked. Bank of England will be spooked as well because they're going to see a very tight labor market. Yet they're also looking at inflation, which is really wiping out earnings. Earnings rising by about 5% in the UK, but of course, inflation is over 10%. So that means most people are taking a real term pay cut. The Bank of England will be very, very aware of that fact. Nonetheless, they have said that they are willing to engineer a recession in order to get inflation under control. So we're looking at, in England, as in the US, we're looking for a pretty big rate hike. I'd say probably another 0.75 percentage point in the UK as well.
Well, let's turn to the European Union, Laurie. A new energy package is taking shape, one that I understand may penalize clean energy generators.
Yeah, we've been talking about these packages, gosh, since the beginning of March, Charles. But this one really is unique. It's unique in two manners. One is in which the way in which you just suggested. The energy prices are set by the hardest marginal cost of generating that energy. And at this point, that is gas. So higher gas price means higher electricity costs across the system. Now we're looking at some wind farms. These are in Denmark. These wind farms do not cost a lot to produce on a marginal level. So once the infrastructure for a wind farm or a solar farm is in place, the cost of generating electricity is close to zero. So that means these wind farms are able to charge at the highest possible rate, which is being set by gas. That means they are profiting to a great extent, much more so than gas companies are. Again, because the fixed costs for wind generators have already been sunk, so to speak. So that means all of their revenues are profit to a certain extent. So the EU is talking about penalizing or putting a windfall tax on renewable energy sources. This is the first time that we've heard of renewable energy sources being levied with a windfall tax. And so while there's some sense in doing this because of the excess profits that these renewable companies are making, it does over the longer term raise questions about whether we're going to see continued investment in renewables.
Laurie, thanks very much indeed. Laurie Laird, Arise business correspondent, talking to me from London.